What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do provide daily memos on X at Hemi137. I also do provide current events on this channel, and I do have a blog that essentially captures all the notes from the videos. We'll be adding some additional how-tos on the blog as well. So just keep that in mind. So check that out. That's out in the description below. And if you haven't subscribed, go ahead and do so. And go ahead and hit the like button, as we want to try to get this message out to each and everybody to inform them of what the current events are and how to translate that to your charts. So with that being said, we have had something I've stated coming into this earnings cycle is essentially the first 3 to 4 weeks. You're going to have all the big industry leaders reporting. That is actually what's going to move the market initially. But what we are starting to notice is that news is kind of big news is dropped. And so what I talked about, how they are trying to essentially stagger any kind of information, so that way we don't get a ton of bad information all at one time, and how dramatically it can drop the market, as we've seen a couple months ago when Apple and Amazon were reporting on the same week and they both did horribly bad. It gapped the market down. And so now, to prevent that, what they are doing is staggering specific businesses apart. A week apart makes a big difference as opposed to just a couple days. And then you also are getting information that's being very staggered, because if you essentially throw all that, essentially the market is about momentum. So if you start gaining momentum within a couple days, if you get a big news event, it's going to have impact. And then if you get continued more bad information, it will continue to pile on and start taking down the market even quicker. So again, this is why a lot of stuff has been staggered. This is why a lot of stuff is essentially packaged for headline news and put in terms that make everything look bright and shiny and okay, when in fact it is not. And this is why I do this channel, is to expose a lot of the reality of the situation opposed to what is being displayed, and then also help you again translate that to how you can take advantage of that in a market, and by using essentially charts and analysis to be able to do that, and again understand the impact of what the market can do, because it changes the market dynamic very, very quickly. So with that being said, we had a big week. Nonetheless, there wasn't a lot scheduled. We did have Powell during the week. He talked again more hawkish tone, very hawkish tone, and a lot of people are expecting otherwise. The market started ripping since the week before because Powell was hawkish, and so everybody kind of took that as, well, he's going to pause. And something I talked about, if we're officially pausing, we got about a 2 to 3 month span in which we will run up from that point. Now, this is just we're looking at the baseline. I always try to have a baseline, normal baseline. On average, this is what happens. Once you get an official pause, the market will rip 2 to 3 months, just depending. And then from that point, you will start to, once they start cutting, is when you start pricing in a recession. And so there was a lot of talk about, just not having any cuts this next coming year. They're going to say that. Of course, they're going to say that. They are not expecting it. So unless there isn't a big event, which I've been always alluding to, there will be some event that's going to force the Fed to start cutting rates, and that's when you're going to get your price in a recession. So with that being said, this past week, we still have a lot of really interesting information that is, again, leading more towards a very hard landing. And the way things are going, it's not going to be just a hard landing. It's going to be a hard crash is what's going to happen. I'm talking about the economy, how much impact that's going to have on the market. It is hard to say, because the market itself is very manipulated, because, again, we've seen that. If you've been at all, spent any time in the markets, you realize that stock market is always heavily manipulated, and now it's even more so with the staggering the information, so that way it doesn't crash the market. And again, trying to not draw panic, because we don't want bank runs, because the banks can't live up to the amount of money that you hold in the bank, because it's all leveraged out to other people and other loans. This is a debt-based system. So with all that being said, this past week, we had another Moody'S cut on the U.S. credit outlook for stable to negative. So we're talking about the outlook from what was stable. Understand that essentially what the credit rating does is to allow us to essentially brings confidence to people, understanding that the U.S. can pay its debt. And the fact that we're going from a triple A, this is essentially another warning shot saying that you are potentially going to use your triple A and get knocked down to double A. And you can only understand the impact that's going to have. That isn't just going to impact us right in this given moment, but many years from now, to try to build that confidence back up and understand the U.S. is just spending out of control, and there's no cap until 2025, till after the election. So this next year, you can guarantee that we're going to print more money that has ever been printed. They essentially took that uh, regulator off of the ceiling cap off a couple months ago, and then it's just been spending wildly. And Moody's has been on top of it and cutting us. And then as soon as this report came out yesterday on Friday, and 5 minutes later, you had Biden jump on saying it's not that big of a deal. It is a huge deal. It is a big, big deal. That means it's going to be harder to get loans or anything like that. And then what does that mean? That puts more pressure on small business. You have to understand, this is what I've been pointing out. This is strictly aimed to small business to start essentially destroying jobs. They don't want people spending money. And yet we still have tons of people out there buying new houses, buying new cars. They don't want any of that. They want people to drain their savings. They want people to kill demand, is what they are doing. And considering that they've created this monster, because during the pandemic they printed so much money that people were getting used to getting that stimulus check and not paying student loans. And so you've essentially conditioned people over the past 2 years during that pandemic that it was okay to just spend. And then all of a sudden they just slam the brakes on everything. And now it's taking way longer for this thing to turn over than they thought, than they expected. Something Powell has said, because of the fact that people have those bad spending habits that essentially the Fed has done. And the administration, you have to understand that it doesn't matter, if you're left or right, whatever. I'm not trying to be political here. I'm just saying the government in general is bad in itself, and the fact that its spending habits are horribly bad. Oh, but don't worry that they are coming out with a new tax inflation change that's going to incorporate tax brackets, and it's going to knock it up. So it'll put you in a different tax bracket. But you have to understand that's only on one particular issue. That doesn't have to do anything with Medicare. Doesn't have to do with anything else. They don't add that inflation into any of these other programs that they have. So essentially they're still taxing you, right? If you're on if you're getting Social Security, you get taxed for Social Security. Why should you be getting taxed for Social Security, right? That used to be free and now it's not. And so it's just the way things are working out is they are making it harder and harder for any American to do anything outside of that. And they are putting the burden of everything. This is why, they always say less government is better, because they are putting a heavy, heavy burden on the person paying taxes. And that's why they want essentially this machine to keep being oiled by families to keep having kids. And I've also read a report that there's been a huge decline in people having kids. And so anyway, that's we're kind of skating out of the branches here a little bit much, but we'll bring it back in. And then we're looking for active listings. The U.S. homes market essentially jumped. This is supposed to be jumped by nearly 36,000. Let me fix that real quick. Jump by nearly 36,000 in October. So this is something we talked about the housing market before, because of the fact that what is going on is there was no supply, and so people could essentially charge whatever they want for their houses, and they were getting absolutely ridiculous amounts of money for their homes, and that has lasted, but is coming to an end because of the jobs market is starting on a heavy, heavy decline. What we're seeing is that people are starting to put their homes up. So that means that what these interest rates are, what the tool is designed to do is actually working, because more people are getting laid off, more people are having to put their homes up for sale. I mean, that was a huge jump. I think the last jump was up I want to say it was 22,000. So it's jumped quite a bit. And it's going to continue to jump, especially in the next coming months, because this isn't going to end, at least for a couple more months. I think you're going to get more pressure. We need a bigger event. This isn't enough for the Fed. And I think, again, the Fed want to wait and see what happens for Christmas. And then after that, they can essentially gauge where they can start cutting rates. But they can't give any of that information yet until they know we have to get through the holiday season. We have to know what the spending habits are and see how much money people actually have. And that's what they're trying to do. That's what they're trying to gauge. And so we'll wait and see what happens there. Personal savings rates near the lowest levels on record at 4%. So we're going way past even, pandemic and everything. Things are really in really, really bad state. So at this specific point, WeWork officially files for bankruptcy. We're losing more companies to bankruptcy. And again, a lot more layoffs are also rolling in. And then something that's very interesting is we've had cyber attacks on banks. It's something I didn't talk about the previous week. There was a lot of reported issues. I believe it was last Friday. And then this week, there was a cyber attack against a big China bank over this past, I think it was like a day or two ago. And so that being said, there will be a lot of cyber warfare going on with the tensions between China and the U.S. and still with the Taiwan. You have to understand that is a big player in everything that's going on, because the amount of semiconductors that they do produce, it's going to take years for the U.S. to even get close to that. That's why it's very strategic that the U.S. does not lose Taiwan. And then also understand that China is very much ahead and they're producing their own stuff. And that's why they're trying to take over Taiwan. This is why Taiwan is such a big deal in everything that's currently going on with this global crisis that we got going on. So we have that. And so there's, again, a lot of really important information that's hitting the market right now. And then you got a market that's continuing to climb back up. Right. So once we get in the charts, we can look at that. But upcoming week, we have the core CPI, which is scheduled for Tuesday. We have core PPI. And on Wednesday, we've got a lot of Fed speakers, again, talking this week. So again, the core is going to be important as it's starting to get closer to that 4%. If it starts rising over that, that could be a huge issue. And I talked about inflation wasn't going to be a problem until it started coming back, and it's starting to creep back in. We'll see what happens here. If it remains stagnant, I think they'll take that as a more positive sign. But if it starts climbing into the fours, that is going to be a problem. So we want to watch and see what happens there. And then, so we'll watch those two reports this week. Those will probably be the most impactful that is scheduled, but we'll see if there's any other major events that do come. Upcoming earnings this week. Again, something I've said is at this point, none of these are going to be hugely impactful earnings, but they do give you a good sense and pulse to the market, especially this week, because we're getting into retail. We're looking at HD, we're looking at Home Depot to see where people are at, especially people have been trying to build their equity in their homes. And so they've been taking out a lot of HELOCs, and HD is essentially been benefiting from that. And so we'll see what HD does on Tuesday. I have SC. I kind of like SC to some extent. They're in a lot of different things, but it's kind of good to kind of see what the overseas pulse is as well. And then Wednesday, we have Target and Walmart. Again, we want to see how much losses. This also tells you the state in which everything is in, is their losses. I think those are the biggest things I've been watching with Target and Walmart, is how Walmart's done better because it's heavier on groceries. Target's trying to do the same. So just keep that in mind, because any kind of retail and clothing or anything like that, they haven't been doing very hot. Like, it's mainly been because people, like we've been talking about all this time, is people are just trying to feed themselves, provide shelter for themselves, and that in itself is very expensive. So again, I want to see what their losses are, because there's been a huge amount of theft. There's been a huge amount of stores being closed, and so that will give us a good pulse on what's actually going on essentially on the streets, if you will, of the economy. And so those why those are always really good to be watching there. So as far as watch list, I didn't get the numbers from the SPX last week. It's back down, but we do know the baseline for SPX is roughly around 60. So we're at that. So the market's not expecting a big move in the economy. So we'll watch that. Tesla has been bumped up from 9 from last week. And the big reason for that being is because of the core CPI. If inflation is very high, tech will get slammed. And so you'll see them pricing in more on any tech that's out there. Tech has been pumping over the past week. Again, Apple has been, even though it had horrible earnings, it's still pumping. And so with that being said, they're pricing in a lot for tech this week because of that fact. If inflation starts to rise, you could see some very dramatic drops in tech. So we'll watch that. BA roughly around average. It's slowly coming down. Again, BA and JP Morgan doesn't really move that much. The banks are really not expecting anything at all in the banks. So if something does happen in the banks, it could be, you definitely take advantage. And this is why I use essentially these projections going into the week, expected moves going into the week. They help, so you kind of know what you could potentially take advantage of if there's any headline news that does come out. If it's in the bank sector, you know that, hey, they aren't really pricing in a lot in the banks. So if there's a big move in the banks, you could definitely take advantage of the options there. If there's a big move in the economy, you could take advantage of SPX because they're not pricing in a lot over the past couple of weeks. We've had a lot of big events, so they've priced in up to, I think we were touching close to 100. For SPX over the past week. So they try to price in a lot. They've dialed that back down because there's not really anything scheduled that could potentially impact the market. So again, tech may not be the play this week just because of what's going on. I started noticing that towards the end of the week that tech was pricing in a lot. So this is where it's good to flip back and forth to have an index and be in different industries so you can kind of gauge and see where it's at and then go from that point. So with that being said, let's get into some charts here. Now, SPX, again, this current level here that we were watching around that 43.74 was an important level. It looks like we're starting to break back over that. Something I've stated is we could potentially run back to the 4,600. Given the span between now and the end of the year, we don't have any really major impactful scheduled events. We're not expecting anything out of the Fed as far as a cut, as far as interest rates hiking any further. We do have the core, which could catch the market by surprise. It really depends. That could change things if it's dramatically high. So do keep that in mind. So that is something that could impact the market. We're not really sure just yet, but we will watch and see this week. So it'll be a very important week to see. We could, like I said, we could run up. This could be a week to run up. And so, like I've stated before, even though my overall sentiment on the market is bearish, it's not to say don't take advantage of the pumps, because if there is pumps, you can take advantage, especially because there's a lot of short squeezing going on here. And so if you are playing good names in markets, this is why I trade a lot of the beta stocks, essentially because of the fact that there's a lot of liquidity. They essentially like the big seven, right? Those are the kinds of stocks that I like to trade because there's a lot of liquidity and you have a lot of things typically going on with those particular stocks. And so when you have these big squeezes, you can take advantage of whether you trade equities, options, whatever the case is. But again, that's why I go back to the expected move, because right now you really don't want to be trading tech during this week because they are pricing in a lot, and that's why it's good to know that baseline. So maybe HD or something like that. Again, there's a lot priced in because of essentially earnings, but once you get past the actual date of reported earnings, then they get adjusted after that, shortly after that. So those are things that you need to be watching this week, like I said. So will be a very interesting week, especially if we do decide to start running. So we'll see how that does play out moving forward. Financial sector could be a good sector to play this week. SPX in general, if this thing just wants to start ripping back to 4,600, those are particular things that I am looking at this week. So we'll see what happens there. But again, if this thing does break down, it really needs to hold the 48 mark. Again, this is what I talk about manipulation. This thing sold off heavy, and then you've had like a couple of days where this thing just ripped right back up to normal levels, like nothing ever happened before. And so this is what I'm talking about, is this selling. We've seen this multiple times. You get big selling, you get massive rips up. Again, there's a lot of short covering that does help with this. So when shorts are forced to buy, it helps with the squeeze that pushes it back up. So again, we'll wait and watch and see what happens here, but that's currently what we have there. We'll take a look at Bitcoin. Bitcoin is ripping. It is quite breaking out up to the 38 level again here, saying I've talked about this before. I think on these levels, we could get up to this level. You have to be very careful with Bitcoin. Even though I do believe very much in Bitcoin, there was a lot of things that could potentially occur between now and halving that could reset Bitcoin down to lower levels. You have to understand that there's still stable coins. There's still Binance out there. Any one of these things play out, they could be a big catastrophic event and reset this thing down. So just be careful of that. I'm not saying, you should have a plan when you bought it, or if you're buying, whatever the case is. Definitely wouldn't FOMO in at these levels because you don't know what is about to happen. That's why I like to talk about the things I like to talk about, because of the fact it can correct at any point, and just be aware of them. As long as your risk management is in place, then you are coming at things strategically and not just buying and FOMOing at levels like this. So I did want this to come back down to at least 30 and retest. Maybe at some point at this week, we can come back and retest again with everything that's going on with the credit downgrades and, the outlook being negative. These things can affect, and I think this is what's helping drive Bitcoin on top of everything. So just keep that in mind. So there's been a lot of fuel, a lot of positivity going into Bitcoin, but then again, just again, be aware of the two potential black swan events that could occur that could really impact the market. So you have to be very careful about that there. But we'll continue to watch. Again, you break out of this 40 level. I have to go up to the weekly to see. Break out that 40-year level, you're really kind of looking up here. Then you're kind of getting at that 50 mark. If we do start if Bitcoin really wants to start getting crazy, again, this is a solid level we haven't seen in a very long time. So if we do get up, this is actually the first time we kind of retested this level. So we could get a hard rejection in the sell-off. So this is why you have to be very careful. See this solid base here. This is the first time ever since we broke that back down below it. We haven't really attempted or even gotten up that high yet. And we're there now. This is a monthly candle. All right. So something could occur and this thing could come crashing back down and make newer lows. So you have to be careful, especially on big support levels here. This was a big support level because we popped right off of it to a new high. And then, like I said, we pretty much buttered straight through it, and we haven't had a chance to get back up to retest it. So we will wait and see how this does play out. But Bitcoin is definitely something that is going to be in the future, and I think something that is going to be part of our everyday lives. But again, just realize it can't go straight vertical. You don't want this thing going straight up because that just means it's going to crash pretty hard when it does. So, and there's a lot of institutions and administration talked about this last week. They wanted to do something about Bitcoin. There were rumors swirling around. They wanted more control over Bitcoin. They didn't like what it was doing. And again, something I've also pointed out, every time a country has tried to get off the dollar, the U.S. has attacked them, and we've had war with them. Be mindful of that. There could be new laws and regulations that come in that could absolutely just crater Bitcoin. You have to be aware of that. So again, just risk management. This is why risk management is everything. So with that, we'll jump over to Tesla. So Tesla, again, there was some news that came out with Tesla too this week. If this chart would stop acting all funky. There was some news that came out with Tesla this past week, essentially saying that they might be, Tesla and Toyota, essentially saying that they are looking to potentially unionize or push unions onto them. And, that's one of the big reasons why Tesla has been so innovative and helped cut down on price, being able to drop the price in their vehicles, is because they outsource a lot of that stuff as well. And Elon's very good about designing equipment that allows them to cut costs. And so, trying to force unions and stuff onto something like Tesla isn't going to work out very well. As they'll find another way around it to cut costs, and that's what they're trying to do to make cars more affordable. This is also why I say it's not good to be out there protesting right now, because things are just so inflated. Eventually, they need to come down. They need to normalize. And if you're going to push to the fact that you want $300,000 and only work 4 days a week, you're going to be corrected pretty bad. And the fact that yes, you may get what you want, but then that's, half the workforce is going to be essentially wiped out because the company is no longer profitable, so they can't pay anybody anyway. So at that point, they have to do what's best interest in the company, lay off half or three-fourths of the company, and start using robotics or using AI to replace these things. And that is something that the companies have to do. They're being forced to have to do because they can't remain profitable paying someone $300,000 a year, uh, and also not getting the productivity right. We have to understand that because of the nasty spending habits of the government, that we don't have the production numbers to compensate for the amount of spending that we've had. This is what GDP comes into play. If your production isn't what your spending habit is, well, you're in for a big problem, and that's why we are down this road right now. Is the government spending habits are way worse than what we're actually producing. So if our production came up, then it would be fine. But our production is not there, not even close to the amount of spending that we have. And this is why AI has been so hyped and why robotics is being so hyped, because a lot of stuff can be automated and work around the clock. And that would help with production, but we're not there yet. So again, this is why it's such an issue as of right now. So with Tesla, again, we'll wait and see. It did sell pretty heavy. It tried to break that 200 last week. It looks like we are trying to retest this level here, roughly around the 225. We'll see if this thing does come down. Again, it really needs to break that 200 level. A clean break of that would at least send us back down to 150. And then from that level, then you're pretty much straight shot down to 100. So this thing could drop a lot. So the key level with the Tesla is the 100. We'll see if this thing wants to start pushing back up. If it can start getting momentum, could potentially start seeing 300 again, but we'll have to see. Again, Tesla's getting out of that earnings decline, right? I talked about 2 to 3 weeks after earnings, essentially there'll be a decline after that stock. It kind of solidifies, it consolidates, and essentially starts pushing up for the next earnings cycle. So that could be something to really be watching close with Tesla. If Tesla really wants to start ripping up, like I said, it could start going for that 300 again, but we'll wait and watch here this next coming week. I think will be important. Palantir, again, still very, very strong in a lot of different aspects here. Looks like it wants to break out this week, so we'll see if it can break above the 20 this week. If it can, this thing can really get some momentum and really start ripping. Again, the next real true level is probably roughly here around that 30 mark. It's kind of what I'm looking at here. So we'll see if that does happen this week. Again, there's a speed bump here roughly around the $24 mark. But ultimately, I think we're aiming for that 30 mark. This is why I do zones, because you want to know what your next target is instead of just, it's going to go back to all-time highs all of a sudden. I go by targets. So this is essentially my next target. We'll get rejected off the 24, come back down, maybe retest the 20, and then maybe go up to 30. We'll see how that does play out there as well. So watching that. Again, it needs to hold that. Otherwise, it could be headed back down to the $14 mark there. I bring up Apple. I don't typically talk about Apple, but Apple has been absolutely crazy. Like I stated, people are starting to safe haven back into Apple. We may be going for a retest of the 200, maybe getting rejected and coming back down. We'll definitely have to watch and see. But the key level of support here is roughly around that 172 mark. So it needs to at least hold that, and then play in that range between there and the 200. So we'll continue to watch that there as well. Then we'll look at our usual suspects here, BA. Now, BA, let's jump back to a daily chart here. So BA essentially buttered through this huge support and resistance area here that was stuck in for so long, and now it's like we're almost back in that range, essentially between the 191 and that 215 mark. So we'll see how it does. It looks like it was trying to just retest and drop. So that's still a possibility. It really just depends on what happens over this next week. And then we can go from there. Again, we are coming into options expiration around the middle of the month. So normally that could lead to some big selling as well. So watch throughout the week. That kind of takes place all throughout the week. So it could be added sell pressure, but we'll wait and see what happens there. And then we'll look at the banks. We'll look at JPM. Like I said, it buttered straight through the support, and then it looks like it ripped back up over it. This is what I'm saying, the manipulation, because this thing breaks the supports. And why I don't like any kind of like essentially patterns aside from supply and demand, because a lot of patterns, especially when there's a lot of manipulation, patterns just get absolutely wrecked. And as you can see, even with supply and demand, that's starting to get to a point to where it's just completely buttering. But you do notice if we do have a lot of momentum, we'll typically catch up. I mean, it could even hit this zone here that I had here at this lower level is what it looked like it hit, and then pop straight out of that. So we will continue to watch this again, and we get in these little choppy zones, and then you get big breaks to the bigger zones, and then push back up, and then chop, and then break up to these bigger zones. So we'll continue to watch this with JPM. Again, it's not expected a big move, so it may see 150 this week. It may drop back down into 142. But again, nothing big scheduled. It's not really expecting much. Goldman Sachs looks exactly the same. Bank of America looks exactly the same too. As it's these charts are like going nuts today. Bank of America, same thing. So you got the zone up here, roughly sitting here, and then the other zone down at this other level here. Like I said, it's pretty much it's almost the same exact pattern on all the banks. So wait and watch and see how that does play out. But if you've made it this far, that's pretty much what I got. It's been a crazy, wild ride. This week we got some data. So those are the big events with the core and with PPI. We'll see what happens there. Again, if inflation starts creeping into the 4, it could make for a big move on the index, which will essentially ultimately affect tech. We'll be the first ones to go if that is the case. Tech has started ripping back up. It could completely take out all those gains very quickly if that's what happens. So just keep that in mind. But aside from that, again, risk management is everything, and I will see you guys on the field.